Welcome, traders. Welcome to Money Mitch. I'm here, Money Mitch. I'm here to show you guys the story stocks. You guys can follow me on Twitter at Story Investors. Definitely hit me up. On today's Money Mitch, we're going to get into some market sentiment. We know we just got a dip. We're going to talk about some notable earnings. We're going to talk about how to short when you only know how to go long. And we're going to get into the story stock sector to watch out for if we get to our like goal. So definitely hit the like and let's get this show started. It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now, we all know the bull market is here to stay. Money Mitch. Welcome back, traders. Welcome back. Let's get into the overall market here. So the overall market really cut sharp losses at the end of a wild session, guys, far off their lows on Wednesday as cryptocurrency, Bitcoin, it really hit and Bitcoin recovered, but a lot of the altcoins really didn't. And one of the things that we saw was the market did come back. But the question is this an ouch, or is this starting to really start hurting us now? Now, one of the things that we've seen weakness in speculative pockets where the market still weighed on the market. The major average briefly started going up, guys, in the afternoon. But what happened there was that the Federal Reserve minutes from April's meetings hinted a reconsidering of its asset purchase program in upcoming meetings. So pretty much the Fed's showing there that, hey, we might have to taper off a little bit. But, this is something I'm going to wait to hear from Powell's mouth. I'm not going to go ahead and jump forward here. I'm going to wait to hear what other kind of comments Powell makes. So that's what we definitely need to keep up. There's been a sustained pickup in price pressures. So this really could unravel the Federal Reserve's accommodative price policies right now, which could hurt technology companies that have been, relying on this for years as easy borrow costs for superior growth. That's what we don't want to see. We don't want to see interest rates rise, because if interest rates rise, of course, this is going to hurt those big tech stocks. So one of the things that happened today, and this could be the reason why we're starting to see a decline in Bitcoin, I know that there's a lot of Bitcoin fans out there. So the question is, what really happened with Bitcoin here? There was talks that the people of Bank of China issued a statement on Tuesday cautioning against the use of cryptocurrencies as a mean of payment. What happened? Despite the fact that Chinese officials were merely reiterating their previous stance on trading virtual currencies, the news seemed to deepen the existing sentiment of the market-wide fear. So Bitcoin actually dropped under 40,000 for the first time in 3 months, guys, losing 15% of its value just overnight like that. Ethereum dropped 23% in the past 24 hours. And you guys could see it. A lot of the altcoins got hit like 30, 40%. We could go into each chart here, and it's going to be something that definitely is going to be on a lot of people's radars. A lot of people are wondering, does diamond hand Tesla really have diamond hands? I'm wondering this myself, guys. Elon Musk putting out this comment today, after he kind of shook up the market a little while back, but now you see him trying to support the market, pulling out that Tesla has diamond hands. And we all know that he was mentioning here towards the Bitcoin. These are the kind of comments that I just don't know if Elon's going to be able to continue making these comments, because he's back and forth, and he doesn't understand that he's really affecting price here. So that's definitely something to definitely keep an eye out to see if for any reason he does get hit. But as you can see from this chart here, Bitcoin is only down about 11% as this huge wick kind of was made up today. And we're going to see, does this hold, or do we get back down towards that 35,000 level in the next couple of weeks? I would be a little bit careful here. I don't see this thing going to rally just straight back up to 50K here. So you got to be careful. It could just be a kind of a trap, as there was some people buying today and people selling at the same time. I did see day traders try to jump on the momentum and make that quick profit. And a lot of them were able to capture that profit in the day. But the question is, now that those day traders sold out, and they sold out of their position, and a lot of people sold out of their Bitcoin, will we see a continued momentum move down? This is what we need to definitely keep our eyes on. And of course, the Doge, where the dog's at, woof, woof. All right, let's see what happens with this one. This one's coming back down, all the way down, closer to 20-something cents this morning, guys. Got to be careful there, guys. But one of the things is, I do want to see this one get back down underneath maybe 20 cents or near that level, because I'd be willing to maybe take a little bit for the long term to see when we get another Doge spike. But be careful, guys. As we've seen, the cryptocurrencies have taken a fall now, and lately we had seen them really on the rise and in favor. Like growth stocks, sometimes the story changes here, guys. So if you're a big cryptocurrency fan, then of course, you can stay in with the bulls and kind of stay in the market. But one of the things I do notice is that this story has changed, and it could change for the long term being, at least for right now. And we could go back into kind of one of those bear dips in cryptocurrencies. So be careful out there. I'm just going to pull it out there that you got to be careful now. It's not just that easy money, the same way you saw the SPACs fly in kind of in November and December. Now you got to be careful. Now you got to pick and choose what you're getting into in these cryptocurrencies. All right, so guys, that's going to do it for our Doge. Let's go ahead and start talking about the market sentiment here. When we return, guys, we're going to get into what happened in the market today. We'll look at the SPY. We'll see the kind of pocket that we've been in. We've drawn this pocket before. So when we return, guys, we'll take a deeper look.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
So I love about you guys, you just had all your callers in right then. And it's all about the community here at Benzinga.
What's going on, traders? What's going on? How are we doing out there, guys? We're going to get into our market and get into our earnings, but definitely smash the like button. Catching up with the chat here, seeing some comments. What's up? What's up? Why the Heat jersey? Where the Knicks at? Oh, we'll see the Knicks in the playoffs. Don't worry. We'll see the Knicks in the playoffs. I'm seeing mention Richard. Richard, what's going on? How we doing? Rick House, what's up? If you're new to the show, say hello. This is the show that will definitely recognize you, especially if you're a loyal viewer in the chat. So definitely say hello if you're new to the show. This is what I love to see. Calm now, calm now. China digital currency electronic payment is the opposite of Bitcoin. We'll take a look. We'll take a look, One life, one chance. You guys already know. We got Rick House telling me about the guns. The guns are to the show. Now I got to get back to the gym. But when I get back to the gym, you guys will see the guns. They'll be here. What's going on from Baltimore? Hey, if you guys are here from all around the United States or around the world, go ahead, put your location in the chat. Put what state you're from. I'm in Colorado right now, but still representing the Miami Heat, of course. But I love my Denver Nuggets, so can't be mad about my Western team. Let's go ahead and let's take a look into the SPY before everyone kills me about not talking about the market. All right, so the SPY, this morning I woke up and I said, whoa. Guys, look where we are. Look where we are. We're right in the middle of this thing, man. We're right in the middle of this thing. We've talked about this level, and we've talked about this level multiple times. We need to see if this level is going to continue to hold. What's going to happen here, guys? So I'm going to take a little closer look here for you. So in this closer look, you can see that we started bouncing back up. We looked like we were going to get back towards that 418, and guess what? back and turned around, guys. Turned around in 2 days. We've gone right back down closer towards this 405 level. My question is, do we get back up to 418 again, or do we test this line first? I think we're going to test this line first, guys. And so definitely be careful in the next couple of days to see if we get this pullback. This pullback could come back closer towards a 403 and kind of maybe even get closer towards 400 on the SPY before I think we come back roaring. So this is when you got to be careful. And this is when you got to go ahead and look at other charts. Find what you want to get into when the market comes back roaring. Like always, guys, we always talk about how the bull market is here to stay. And the bull market, I do feel, is here. But at the same time, you will get market corrections. So here's the hourly chart, guys. You can see how it went to that 418, knocked down. Today, some high wicks around 410. What we need to do tomorrow is get towards that 415 and start pushing towards that 415. If not, I think we're going to come back and test this 405. And if we test that 405, I could see that crack down and come closer towards a 400, which would give us closer towards, let's say, from our highs here, closer at that 422. We're talking near a kind of 8% pullback, 10% pullback correction. And that's kind of what I'm expecting, guys. Sometimes we do get these corrections in the overall market. The Qs is the interesting one. As we're starting to see some volume come back to the Qs, you've seen the bounce right off the bottom line that we've been drawing. And we drew this little box because we knew that it didn't have much to get there. And now it's actually bouncing back up. So I need to pay attention to the Qs. I think the SPYs won't tell us. Pay attention to the Qs. If we get this to start ripping back up, you see the Qs back up at 340s, then you can definitely say that, hey, the SPY is going to rip back up there towards that 420, and we can start really lifting off there. So keep your eyes on that. And let's go ahead and let's get into our earnings calendar here. If I can turn it up here. There you go. We got the earnings calendar pulled up. Now it's time to get into our earnings of the day. Who won? Who lost? Let's talk about Cisco first. Shares of the data center networking hardware maker dropped more than 6%. I actually heard Dennis Dick say, oh man, I forgot I had that order out there. But definitely it dropped more than 6% in the extended trading after the company issued weaker than expected guidance for the next quarter. And Cisco said that it sees 81 cents to 83 cents in adjusted earnings per share in the fiscal fourth quarter, while analysts had expected 85 cents. And so the company's profit and revenues for the fiscal third quarter came in above expectations. However, you're seeing them take a hit here. So definitely we're going to keep an eye out on Cisco to see what happens here. Because really what it is that a lot of these stocks are out of favor right now. They're not the hot stocks. And even if they do good earning reports, we've seen some great earning reports quickly get rejected. All right, guys, next one up. Of course, L Brands. I know we probably got a little bit of Victoria's Secret fans out there in the chat, but shares of Victoria's Secret's parents fell more than 1% even after the better than expected quarterly report. It adjusted earnings per share came in at $1.25 versus the forecast of $1.21. So definitely the revenues here topped the analyst estimates, but they were driven really across by its business and more people paying at full retail price. You heard that, full retail price. So yes, what happened here, guys, is Victoria's Secret said, we're taking those discounts back. We're going to hold back a little bit on the discounts, and we're going to try to get that full retail value. And as you guys can see, they're actually not doing too bad in the pandemic. And I think this isn't a bad play. I mean, it is a little bit high on the price right now. So definitely keep your eyes on some big pullbacks. But this was a stock that, I mean, a lot of people had it in the dead, and it really actually went up pretty significantly in the pandemic. So definitely keep your eyes on L Brands. Synopsys also went down. Not the biggest report there. We're going to be paying attention towards some bigger names later in the week. You know, early in the morning, we did get a good Target report. Lowe's definitely is getting hit. We talked about this before these earnings came, and really that just comes to show us that a lot of the times we're going to get these earning runs into the earnings, right before the earnings, and then you see that turnaround right before it. And definitely you saw that in Home Depot and Lowe's. We talked about how to short those, but definitely tomorrow, guys, before the open, BJ's is going to be an important one. Petco is really on my radar, guys. I have this feeling that we're going to start seeing some good numbers start coming from Petco. So definitely keep your eyes on that report tomorrow morning. And of course, the retailer Kohl's here is going to report tomorrow. Let's see if retail comes back roaring. We did see retail completely tear up earlier in the week. So I want to see if they come back, if they start roaring. Maybe Kohl's report can start that off tomorrow. All right, guys, when we return, we're going to get into how to go short when you only know longs, baby. So all our bulls out there, I'm going to teach you how you can still go long and affect and have that same effect and essentially go short when we return, guys. So definitely smash the like button. I'm only seeing a couple likes out there. Come on, help me out. Hit that like. When we return, we'll get into how to go short when you go only long. Welcome back, traders. Welcome back. Let's go ahead. And first, I want to give some shout outs. Hello, Fernando. Hello, Tonya, T-Chess, Kim. What's going on out there? We see Miami, Ohio, Colorado, Detroit. Go Heat. Definitely. Texas, Arizona, Oklahoma, New York. Hey, shout out to everyone out there. I appreciate you guys hanging out with me here, 6 p.m. Eastern time. We do this every single day. We talk about story stocks. You guys know my three variable approach. It's all about the story, the fundamentals, and the technicals, guys. But today we're going to get into, of course, a trending topic. Let me know what you guys think here. What do you guys think in the chat about evil shorts? Evil shorts. Do you guys feel that shorts are evil? You know, for a long time, there was this talk, and I kind of agreed with the talk at the time because it was mainly about the GameStop and kind of that commotion. And really what it was that people were putting these kind of supposed naked puts. I mean, it's not really a naked put, but when you over leveraging a stock and going into those extremes, I agree. You're getting a little evil there. You're getting a little evil. I kind of could see that. But to think that all shorts are evil, I mean, you guys let me know in the chat. I would love to hear what your guys' thoughts are. But at the end of the day, shorts are important because definitely, like being mentioned right now, they are healthy. They are healthy for the stock market. Mighty Soldiers talking about it. It's important. I used to short all the time, but at the same time, I realized that this was a bull market, and that's not the smartest either. So I do agree that, hey, you know, evil shorts will always be there. But in this market, the only time I really like to short is when I'm starting to see downtrends like we've been seeing lately. You know, we've gotten these growth stocks to come back 60, 70%. Those are the times when you need to start making some money on the downside. I always hear a lot of people getting stuck in positions and wondering, hey, they kind of know in the morning, this is going to be a bad day in the market. I'm going to see my portfolio go in the red. But how can you hedge and balance that out? How can you probably make some return on the other side so that, hey, even if I'm getting some red today, I'm going to get some green and make back some of that percentage. Let's say if we're down 5%, even if we make 2% on the day, this is going to go ahead and limit the damage. How we're going to do that is we're going to learn to go ahead and long into inverse ETFs. What is an inverse ETF, guys? I mean, this is very important. You know, one of the things that I like to do is look for inverse ETFs because at the end of the day, if you can only go long, you need to learn how can I still go long and play something to the downside, right? And so first things first, we're going to talk about a couple of them, but an inverse ETF is an exchange traded fund constructed by various derivatives to profit from a decline in the value of an underlying benchmark. Inverse ETFs allow investors to make money when the market or the underlying index declines. So anything what you want to see in an inverse is kind of the opposite, is going to do the opposite of the index. So of course, a lot of these are going to be going to the downside. But I mean, if you took a look at your overall charts, you could just flip them. Just grab them, flip them upside down, and that's exactly what you kind of see here. Now, one of the things that you will see in inverse ETFs is you're going to see leverage ETFs, and this is what you definitely got to pay attention to. But inverse ETFs are a great way to take a short bet against a market without exposing yourself to the difficulties and risk of short selling. These ETFs will do the shorting for you guys. And all you need to do is buy the ETF and hold it and make a daily profit. This is important because it's a daily profit. A lot of these inverse ETFs, I do not recommend swing trading because a lot of times they're going to have to do some rebalancing. And with that, you're going to get caught a lot of the times, because what happens is with that rebalancing, you run into what's called compounding. And so when you run into that compounding, because they need to go ahead and readjust the ETF, you can get hurt by swinging it into the next day. So be careful here. A lot of these, what I recommend with inverse ETFs is you look at maybe a small pre-market entry. Yes, I know it's hard to get pre-market entries, and definitely do your own diligence, guys. But that's what I like to do, guys. I like to size in a little bit in the pre-market, because a lot of the times you're going to get a move rip into the market and then you get a pullback just before the market. So let's go ahead and let's talk a little bit about some of these inverse ETFs that you guys can start looking into. So first up, ProShares Shorts S&P 500 is going to be the SH. Looks like I got the SQQ up here first, but I'll go to the SH first. So this one tracks the S&P 500. It emulates the reverse of the price action in the S&P 500. SH is only intended to be used one day at a time as a result of how its basket of securities is formulated. Therefore, investors can only avoid the effects of the compounding by selling their holdings in SH before the end of the trading day. So this is very important, guys. You don't want to get caught in these and hold these swinging. What you want to do is kind of take that momentary profit back from the market as you see your stocks decline. And so I really like the SH. But we'll get into some of more of my favorite ones here on the next two. You guys already got a sneak preview of it, but let's talk a little bit about SQQQ. This is the ProShares UltraPro short. And what this does is this gives you exposure to the NASDAQ 100 technology index. But this one is a 3 times leverage inverse ETF. And what it means by 3 times leverage is that it's going to have really fast reactions, guys, almost excessive reactions. You're going to get multiplied volatility. And so this also comes with multiplied risk. So you have to understand, hey, when this stock, when SQQ trends, it trends. Like as you can see from here, from the 10 to 11, trend straight up here, right? But then also today, it did a really nice trend going into the close yesterday. Then in pre-market, a nice trend up, but right at the open, trending straight down. And so this is what happens a lot of the time with leverage ETFs. Be expecting of these. When they go straight up and straight down, you can ride them, but for only so long. So understand your risk, understand your profit. And like I always say, know both sides and stick to the plan. All right, guys, next one up is one of my favorite, really. The one that I was looking at today was DRIP. Drip is one that I was looking at today, guys. This is the Direxion daily S&P oil and gas exposure here. This is going to be a 2 times inverse of the performance of the S&P oil and gas exploration and production select industry index. So if you guys see, this is a pre-market look, right? I'm going to run you guys through this trade. So definitely smash the like. Let me know in the chat if you guys like me running through trades like this. I saw someone mention Gush. Gush, my man Rick House. You know it. You know it. This is the opposite of Gush here. This is Drip. So this one in pre-market, right? You see the pre-market low right here, right? At this kind of like 7:16 a.m. That 9:36, we even get a wick that kind of shows us even more right here around 8 a.m. And so right into the open, you look like you're trending up to 970. A lot of the times when I see these, I'm going to watch the market open. And a lot of times when we see the market trending straight downwards, we're going to get a quick spike into the open. And why this happens is because a lot of people run to covering positions, and this actually causes a spike in the overall index right at the open. So as people are covering there, one of the things that I was watching is how are we going to open up? When we opened up straight down, coming right towards that support. This is when I want to go ahead and grab that stock. I want to either grab it right by the support, trying to play a red or green move, or I want to look for the stock to come back above my favorite indicator, which is the VWAP. And once we get above the VWAP, we're going to look for a quick dip back to the VWAP. We'll grab it there once we get confirmation. The confirmation really was above and holding the VWAP, and then you can go ahead and jump in this one for a ride up. Okay, so let's take a look how it came right after that 936. You get the drive up here. It drives up past the VWAP, and you come right back to VWAP, and you actually close right at kind of up above the VWAP, and it comes right back towards VWAP again, giving you that confirmation. It wants to hold there. It wants to hold. You could have hold towards, let's say, a risk point here, right under that 950 or maybe 945s. And then you're looking for a move, a 25-cent move up there from about 955. So you're looking for that 975 breakout. And if you see the high here, the high is 970. So you're not looking too bad there for a 2-to-1 trade. When you start ripping up there, look to follow the MACD. A lot of the times I'll follow the MACD until it breaks here. As you guys can see, the MACD actually breaks here around 10:15. And so as this one rode up, I was watching this one. I really liked it around 945. I could have got in there and risked off a 936, but if we got in here for the VWAP bounce, once I get up there towards that 975, I want to see the momentum take me above that 975. And when I start seeing the selling happen, the selling action happen, that's when I'd go ahead and take some profit. Somewhere between the 980s, 975s was a good profit area in this chart because that was the quick trend up, right? The quick trend up. That's what you're looking for. Even if you got it in here, let's say at this kind of positioning here in the middle, you could have got a 2% move up and made some profit going back into this inverse ETF. So definitely, guys, let me know what you guys think on this move. I definitely like this chart right here. These are my kind of day trades. These are the ones that I look at. What I want you guys to do is definitely learn from these charts. Learn how I approach it. Learn how the mentality of the market can go into looking for trades. Because I think this is very important. Today, we were looking at the market coming down. And one of the things that I said was, if oil takes a downturn, that's when I could see the market continue coming down. So that's why I took the look at Drip and Gush, and I could see Gush coming right down. I'm not going to play the short side. I could still play the long side in Drip. So definitely, guys, if you guys want to check it out, guys. Inverse ETFs are really fun to play, especially on the downside in the market to protect your account. And I think this is very important. All right, guys, so I'm going to go ahead and hit the refresh here so I can see how many likes we have here. It looks like YouTube is still struggling on the refresh for the likes, but it looks like we only have 35 likes. We need to get towards 50 likes, guys. I want to talk about some story stocks here coming up. So definitely, we need to start looking at some sectors right now. What's going to come back? I have one play that I'm going to talk about when we return. So definitely, if you guys want to hear it, hit the like. All right, traders, welcome back. Welcome back. Going to catch up with the chat here. Looks like there's a lot of people talking. Give me some likes. What's up, people? We got 44. We're almost there. I want to get into some stocks that are right behind me. I just got to scroll down in the PowerPoint. Looks like everybody's enjoying the show today, so definitely hit the like. Yeah, first trade is fun. I actually enjoy watching first trade, especially someone that's been trading for years like me. It's always fun to hear some rookies. We got a lovely noob. I love him at the end of the day. Rohan's learning how to trade. And the best part is he works in this environment, so he's learning from all of us. Check it out, guys. First trade also has Michael Murray. Michael Murray is a great leader, actually does our client production videos, so definitely one of the best shows to watch. You guys already know I'll rock the suit tomorrow. I got you, Dan P. I'm going to look fresh. You'll see. You'll see. The only way I know. All right, guys, looks like we're getting up there towards that like. Hit the like, hit the like. Let's go ahead and let's get into some of these story stocks. I got you guys as you guys are giving me the love. But definitely, if you guys want to help out some more, hit the share button below. Let everybody know, hey, this show is teaching somebody. It taught you guys how to look for inverse ETFs that a lot of people in kind of the GME and AMC phase, they just didn't even know that you can make some money on the short side, but really going long. And I think this is an important thing. I mean, for those that think that evil shorts are out there, definitely check it out, guys. Check it out. Let's go ahead and let's get into some of these stocks here. All right, so the next one up, we're going to talk about, first things first is we got to find a sector, right? This is what I always talk about, guys. I always like to look and try to find the sector here. So first things first, we're going to talk about gold here, guys. Gold. I love gold. Gold. Yes. I got the gold rush, guys. That's one of my favorite shows on Discovery. And a lot of talk has been talked about how inflation is really going to affect the US dollar. And a lot of people are talking about it. I saw Peter Schiff even talk about it today, guys. So definitely, guys, you guys will see that in an inflationary time, gold is expected to keep coming up. So one of the things that we saw is we got a decline here, and this is a weekly chart, guys, from August all the way until what? March. And in early March, we started getting this reversal, guys. The question is, are we going to pull back a little bit here, maybe come back down closer towards this 950, 900, and then rip out? That's kind of what I'm expecting to see, guys. I don't expect you to see gold just continue just one straight up, but expect this pullback. And when we get this pullback, I'm going to be looking for some trades because I do think there's some stocks out there that are setting up in the gold environment. So we talked about the story, right? The fundamentals are definitely pointing that people are going to want to mine more. One of the things that I've seen is that with gold prices rising, and this happened last year in 2020, you saw, and I saw it even from my Gold Rush show, everyone was trying to pull out the most amount of gold possible because the price only stays at this level for so long. And the question is, are we going to continue ripping in this inflationary time? As we're seeing the inflation continue in the worries of a lot of investors, one of the things that we're going to see is, do they flock to other currencies or gold in this case? So I'm going to be watching. I'm going to start bringing up here some stocks so you guys can definitely watch. All right, let's go ahead and let's talk some good stocks here. First things first, guys. I don't know if you guys know this one, but this is KGC. This is Kinross Gold Corp. And really, why I like this one is the chart. I mean, the chart just looks pretty, guys. The same kind of trend, August to early March, bouncing up, pushing up here, went up there towards that 825. I'm going to look for a pullback closer towards the 750 area. Don't get too excited tomorrow, guys. I don't want to see everyone load the boat in KGC because Money Mitch said that gold was going to the moon. Not just yet, guys. I'm trying to get you on early, because if we can get on early, we can watch this pullback happen, look for the inflation talk, and watch the rip come back. So this is what we're going to look for. We're going to look for the 750, 775 area to hold somewhere in between there. That's what I'd be looking for, kind of in this pullback environment, and then they come back roaring through the 850s, pushing up towards the 9. And I could see at the end maybe of Q3 going into Q4 up there towards 950s and $10. So that's what I'm going to keep an eye out for. There's another one that I want to call out here, KL. KL is a little bit higher priced. I showed you guys the cheapy right there first. But if you take a look here, KL, Kirkland Lake here, Kirkland Lake Gold did a pullback, August to March. Then in April, it actually bottomed. It didn't just rip up here in March. It tested that low one more time and volume came back roaring. So someone stepped up there when they started seeing the other gold stocks continue trend, and KL went to go test the lows. They said, you know what? I'll take a shot here. I'll take a shot. So I'm pretty sure someone stepped up here closer towards this 32, 33 area. And now they've gone and probably added, as we saw the push towards 40 and then a pullback area. And then you got a prior resistance at this 38, 38. So now that we got closer towards this resistance, which is 45, where we touched today, I'm going to look for a pullback closer towards this 40. And we get closer towards that 40. That's where I'll be looking for an entry for this to swing right back up closer towards 45 and 50, guys. So let me know what you guys think about gold in the chat. If you guys want to go ahead and keep your eyes on the gold rush, because I don't know about you guys, but I still remember I'm a little bit evil. And I love gold. I love gold, you guys. Definitely, guys. Stick it up, guys. Another one you can watch, of course, honorable mention, GOLD. Or if you just want to watch an ETF, you can definitely watch the GLD. So definitely check that out. I'm going to go ahead and catch up with the chat. Go Raptors, Kawhi. I'm sure you definitely enjoyed that championship. I can't blame you. How you guys doing out there? Dan loves Disney. You guys let me know what stock you guys are watching in the comments below. One of the things that I want to start doing, guys, is maybe doing some ticker time at the end here where I can get back onto the computer, show you guys some charts, and you guys can give me some stocks to call out. If not, definitely let me know in the comments below a stock that you guys want to see a deeper dive into, and I'll do it on a story that is blank stock. So definitely let me know what that blank stock is in the comments below. I'll see you guys next time on Money Mitch. I hope you guys enjoyed it. I'm trying to make this fun, entertaining, blasting off 40 minutes right at your face. Enjoy it, guys. Hit the thumbs up, hit the subscribe, the share button to let everybody know Money Mitch had some fun tonight. We talked some drip. We talked about the Bitcoin, and we also talked about the potential for gold to come soaring. So we'll see you next time on Money Mitch. Like always, guys, the bull market is out there and it's here to stay. We might get a correction right now, but there's an opportunity out there, and Money Mitch, Miami, is here to help you find it. It's time for Money Making Mitch. When investors need a story, we're going to the moon. Welcome to Money Mitch, where story is everything. I'm here to find you the next opportunity. It's all about the green hands. Now, we all know the bull market is here to stay. Money Mitch.